traders! Today I'm going to show you a trading strategy that's so simple, you will wonder why you haven't tried it yet. No complicated setups, no flashy indicators, just clean, effective trading. You might think there is a catch, but trust me, simplicity often leads to success. The goal here is to avoid clutter and focus on what really works. Sounds good? Let's dive in. The best part? This strategy is super versatile. You can apply it to stocks, crypto, Forex, commodities, you name it. Whether you're into quick scalps or prefer long swings, it works across all time frames. What market are you currently trading? Let me know in the comments. For this example, we're focusing on a 5-minute Bitcoin chart. Our first tool is called Trend Levels, which helps us identify key market levels. To add it, first open TradingView and head to the Indicators section. Second, search for Trend Level Chart Prime and add it to your chart. This indicator highlights critical highs and lows in real time, showing us the market's momentum. But remember, no signal indicator is foolproof. We always need confirmation. Have you tried using this indicator before? To optimize it, go to the settings and adjust the length to 21. This provides more signals, but keep in mind more signals can sometimes mean less accuracy. Customize colors to fit your chart style. For cleaner view, disable unnecessary elements in the TradingView chart settings under the Symbol tab. Next, we'll add the EMA/SMA cloud to better visualize the market trend. To do this, first, head to Indicators. Second, search for EMA/SMA cloud by T.A. Dave and add it. Modify these settings for better trend clarity. Slow EMA 300, fast EMA 100, medium EMA 200. These settings filter market noise and focus on the dominant trend. You can personalize the colors in the Style section if needed. Here's how we use both indicators. A buy signal appears when the price breaks above the trend levels bands. A sell signal occurs when the price drops below the bands. However, the golden rule is to confirm signals with the EMA/SMA cloud. If the price is above the cloud, only take buy signals. If the price below the cloud, focus on sell signals. Ignoring signals that go against the trend helps us avoid false breakouts and bad trades. Have you ever been caught in a false breakout before? Share your experience. Step 4. Risk Management. Managing risk is crucial for long-term success. Here's how you can protect your capital. Set a stop loss slightly above or below recent swing highs or lows. For a sell order, set a stop loss above the recent swing high. For a buy order, set a stop loss below recent swing low. Aim for a profit target that is at least 2 times your risk for a solid risk-to-reward ratio. Step 5. Practice with examples. Let's look at a practical example. If we were in an uptrend and a sell signal appears, we ignore it. When a buy signal aligns with the uptrend, it's a confirmed trade. The same logic applies to downtrends. Stay aligned with the trend. Let's see some examples together to find out how this strategy works. By trading with the trend and sticking to simple, effective rules, you will improving your odds of success and make trading a lot easier. What do you think? Ready to try it out? Stay disciplined, follow the rules, and happy trading!